Well, we're always happy to have Steve Sexton, president of the Sexton Advisory Group, to help us better handle our financial affairs. And Steve has been joining us over the past 3 years, and you can hear Steve on the radio every Sunday, 9 a.m., 1170 KCBQ for his show, Winning in Life.
Steve is in the middle of a special series called The 5 Biggest Mistakes Retirees Make That Threaten Their Financial Well-Being. Today, Steve will be addressing mistake number 3, no tax plan.
Hi everybody. Today we're going to cover mistake number 3, no tax plan. Who prepares your tax return? You, an accountant? Here's a more important question. Do your advisors sit down together each year after tax season to review your tax return line item by line item to ensure that you are getting the best possible deal with the IRS? Very few retirees can answer yes to that question. Yet, if your advisors aren't reviewing your tax return in detail each year, how in the world can you expect to minimize your tax liability? You can't. Which advisors need to be in the meeting? At a minimum, your financial advisor and your accountant. Any investment advisors you work with should also be in that meeting. Without these types of review meetings, you can easily end up paying the IRS $1,000 or more each year that you didn't have to. In my office, I've seen retirees paying well over $5,000 more than was necessary to the IRS each year, all because their tax advisors and financial advisors were not on the same page. But that stuff's peanuts compared to another tax problem you have. Think about these 2 questions. What is your largest tax liability, and what are you doing about it? If you're like most retirees, you have a substantial amount of money in your retirement plans. That could be a 401k, a 403b, an IRA. Your benefit over the years is not paying tax as your money grows in these accounts. But guess what happens when you withdraw the funds during retirement? That's right, you pay tax. Not only do you pay tax on your withdrawal, but you'll most often owe more tax on your Social Security income as a result of the withdrawal. Most people don't know about the little trap. Here's another secret that no one seems to talk about, but will make perfect sense as soon as I tell you. Your retirement plan is 100% exposed to tax increases in the future. This means that if tax rates increase in the future, your retirement plan's value to you will immediately go down. What exactly does this mean? Let's say you have $500,000 in your 401k, 403b, or IRA. If your current tax rate is 15%, then the value of that account to you is $500,000 minus the share that goes to the IRS. Doing the math, we learn that your $500,000 account is really worth $425,000 to you. But what if tax rates increase by 5%, from 15 to 20%? How would that impact the value of the account to you? Your real account value just went down $25,000. This is the same thing as a market loss, except that this drop is permanent. If you're all familiar with the tax code, you know that it's far worse than what I'm illustrating above. For example, you know that the more money you withdraw, the higher tax rates go. Since withdrawals often impact how much of your Social Security is subject to tax, you end up not only paying more tax on your retirement plan withdrawals, you also pay more tax on your Social Security income, a double whammy. What is your IRA exit strategy? We know taxes will go up in the future, so what conversations have you had with your advisors to protect yourself against those increases? Odds are good that you haven't had any conversations about this. For some reason, financial advisors and accountants tend to ignore this stuff. That's a mistake, and a big one. Hundreds of thousands of your dollars are potentially at stake. Those dollars will either go to you, your family, or to the IRS. Don't you think that's important enough to at least have a conversation about? As part of this series, we have found a lot of people don't have a process or plan in place to address these important issues. If you don't have one in place, we'd be happy to share a free special white paper with you. Just give us a call or go to our website. Now remember, smart financial decisions do impact the quality of your life.